being able to tackle the topic at hand, but then also maybe have a little bit of extracurricular time for you even after our session here today to spend some time on as you see fit. All right, I'm starting to see some of these questions that are coming through. I think that we are good to go as far as the time needed to go ahead and cover those disclosures. Jake, I know you are here ready and raring to go. It was a great session. I heard rave reviews, maybe some of your thoughts just to set the table for folks that did not take part in that session. And then certainly we can go ahead and try to go back and forth, little ping pong style, and knock out as many of these as we can.
All right. Well, we'll definitely go ahead and address as many of these as possible. I will try and answer some of these questions. I think we should best start off, Peter, with just a quick review of some of the real basic ideas we went over last in the class yesterday, but also helping you navigate to some of these key areas on the chart. So go ahead and take a look with me. All I've done to get ready for this is log into fidelity.com. So I'm logged into the website to our test account, and I'm going to come up here to the top right-hand corner. Now, yesterday, we used Microsoft as an example. If there's a stock you'd like us to take a look at, we'd be happy to do so. But we'll start off taking a look at that one. The symbol is MSFT for Microsoft. It's just shy of $400 per share right now and up a little bit compared to where we were yesterday. If we scroll down a little, we can see some information about Microsoft, including a chart and all sorts of other details. There's a lot available to you on this individual stock research center. Nick reminded you that this is institutional level quality, the stuff that fund managers use to make their decisions. So phenomenal information available to you at your fingertips. Our goal is to try and make it usable to you by showing you some of those tips and tricks, what tools are available here at your fingertips. We started off by moving right on over here to the Statistics tab. Again, we're going to click on Statistics. Once that page loads, we've got a whole swath of information available to us. We've got a tile dedicated to key statistics. We did look at this yesterday, but we may get a chance to look at it again today. There's an area about ownership and insiders. Have you ever heard that, hey, the CEO is buying or selling, or some large hedge fund activist is making a move? This is where you could find some information related to those, all based on the SEC required reporting that some of those institutions and individuals have to make. If we scroll down a little further, we can find those actual SEC filings in detail, a link directly to that report with the SEC. The Form 10Q is the one that we focused on, even though we didn't use that name yesterday. This is the quarterly report that comes out every 90 days from every publicly traded company telling us the status of their business. It's actually a form that's somewhere between 20 to 100 pages long in its full form. From that, we get a standardized version, thanks to S&P Capital IQ, simplifying it down for us to just the balance sheet, the income statement, and cash flow statement. Now, there is a lot of information that has to be summarized out. If you want the full story straight from the horse's mouth, well, you'll have to go over here to the SEC and read that report. But assuming you're ready to go ahead and dive in and take a look at least the summarized data here, we can click on More in the top right-hand corner of that financial statements. And here we found our balance sheet. We have the balance sheet, income statement, and cash flow statement. We talked a lot about these, what they mean, and how they are derived. We're going to think about a lot of things as we do, but we notice we've got a row for each different category of their assets, of their liabilities, and eventually the shareholder equity. All of that included and visible to us. Everything is priced based on whatever's labeled up here in the top right-hand corner. In this case, millions of US dollars. So 80,000, like we said yesterday, represents 80,000 million dollars. In other words, $80 billion in cash and short-term investments. Now, we had a specific question related to the income statement. The income statement has a couple of key ideas. So the question was, can we please go over EBIT and EBITDA again, and which row in the balance sheet means which. So that one is not on the balance sheet. Instead, we're going to come over to the net income or to the income statement where we can find all of those details related to EBIT and EBITDA. EBIT is spelled E-B-I-T, and it's just an abbreviation for earnings before interest and taxes. Or if it's EBITDA, it just has a DA at the end saying before interest, taxes, depreciation, and amortization. In other words, let's undo all of that stuff and just say, what are the actual earnings? So let's find that idea here on this income statement. The income statement starts up here with the sales, which often is called the revenue. So here we've got our overall sales. We take out costs. We take out some of our other ideas. And then down here, we get our operating income before depreciation. And we notice that down here lower also comes our taxes. So this is before interest, before taxes. It's before depreciation and amortization. This right up here, folks, this is your EBITDA. The earnings before interest, taxes, depreciation, and amortization. And then 2 lines down after accounting for depreciation and amortization. Well, now our earnings before interest and taxes, this is your EBIT, is right here at 27,000 million or $27 billion. So hopefully that makes a little bit more sense where you can find these. I wish that all of the names were the same everywhere you looked, but unfortunately you do have to have a little thesaurus around to translate for yourselves what this means on the specific page. We had a question wondering when this class will be re-offered. We taught it yesterday in our broad scale webinar format where all of you were present, and thank you for joining us. For those of you who weren't able to attend all of it or simply would like a repeat, we do offer this class on a regular basis, about once per month or once every other month, right here in this same venue through Zoom, where you can log in and ask your questions and we will react to them in real time. So look forward to that next opportunity. You will be able to find those by going to this website. I encourage you to jot it down, fidelity.com. You've probably been there. Fidelity.com/coaching. Fidelity.com/coaching is the website. This is where you can find Peter, myself, as well as Nick and our team here day in and day out. We actually teach some 7 or so classes every single day on varying topics. So if you're interested in something like the fundamental analysis we talked about, that's a rare inclusion in our rotation, but it's going to be right here under Trading Basics. You would click here under Find a Session, and you'll find all sorts of details related to this. You see today's class listed, but as we scroll on down, we have all sorts of related ideas going on and addressing where these come from over time. I have a specialized class that I teach all about sector rotation that lists me right there. Folks, thank you so much for joining with us thus far. We're glad to be here and answering these questions, but that's at least a starting point on them. So from here on, we're going to do our best to address exclusively the questions that you are asking. So thank you for coming. Thank you for bringing your good questions in. Go ahead and send them in right on through. The first question that was sent in came from Cindy, and thank you, Cindy, for asking it. You asked, how can we find the true price of a stock? The true price. That's a great question, Cindy. And I guess we have to first define true price. The true price of the stock would be ideally be what it's actually worth. And depending on your own interpretation, what it is worth and what it should be worth are probably different. The true price, Cindy, I would define as what it should be worth. We could do some calculations and thought and analysis and determine that this company, Microsoft, should be worth $450 per share, or $300 per share, or $400, right near its current price. But that will be our estimate on what it should be worth based on our analysis. However, recognize with me, folks, what it is worth is right here. $397.70. No calculation required. That is what you can buy the shares for right now. And if you wanted to turn around and sell them, that would be the approximate price you would sell for. If I love my car and think it's worth $20,000, $30,000, $50,000, that doesn't mean that the person who wants to buy it from me doesn't come over, notice that it's a rusted piece of garbage with 150,000 miles on it and says, this is barely worth $100. In the stock market, we always have somebody there kicking the tires, taking a look and saying, well, this is what I would pay you for it. A real life quote on the value they deem visible in the market. That's the price. When you use fundamental analysis, you are essentially saying, I don't trust the current price. I don't think they've accounted for everything. Instead, I need to do some thought, measure some ideas, and say, you know what? It should be worth $450. And at $400 per share at $397, that's a bargain. I am happy to buy shares at this price because they should be worth $450. That's what a fundamental analyst is doing. Okay. Now, one of the other pages we took a look at was the sentiment tab here on this individual stock research page. And it looks like we got a request to swing on over and take a look at Qualcomm. Thanks, Gary, for the symbol. QCOM is the symbol. Let's switch it up. No longer looking at Microsoft. Now we're looking at Qualcomm. Qualcomm, and we came to the sentiment tab. And as I scroll down, we have the fundamental analysis sentiment, which we spent a decent amount of time looking at, understanding this 0 to 100 scale. The higher it is, the better. And we've got a relatively high valuation, relatively high quality, relatively middle growth stability, financial health slightly above the middle. If we want more details, we click on more and we can find some of that breakdown on why S&P Global Market Intelligence is coming to those conclusions or having this sentiment, this feeling towards the stock, given its financial data that we would have found on the balance sheet, on the income statement, or over on the cash flow statement. But you asked, Kathy, what about this technical sentiment area? Well, this branches away from the main fundamental focus of our discussion yesterday. And thank you for bringing it up, Kathy. This is a different form of analysis called technical analysis. Technical analysis relies instead of those suppositions of what it should be worth, determining Cindy's true price, and instead focuses on the current price and the price history to say, this is what it has been worth recently. This is the trend of current price. And therefore, it may be worth or not worth joining that trend at this time. It's the use of charts and historical price information to make trade decisions. As we glance over at the technical sentiment, it tells us there's a short-term, mid-term, and long-term sentiment. Long-term for a technical analyst, measuring in at 9 months to 2 years, whereas that might be relatively short-term for you fundamental analysts out there. Think with me about why that is. If I do some thought, some analysis, some measurement of Qualcomm, and I determine that the right price for Qualcomm is $200 per share, that's fine, and I may well be right at some point in the future, but today the shares are worth 180. They're worth 180. And so if I want shares, I'm going to have to pay 180. And if I want to sell my shares to somebody else, they're not going to pay me 200, even though that's what I think they are worth. So it's going to take time for the rest of the world to come around to your point of view, assuming you are correct, for that price to move in the right direction and generate your profits. That's the waiting game of a fundamental analyst, making your supposition, your price target, taking action by buying if you think the price should be higher, then waiting for the rest of the market to catch up with you. A technical analyst instead is saying, well, what's it doing right now? And let's take advantage of that direction presently. As a result, we're going to have a relatively short-term view. Short-term for a technical analyst might be 2 weeks to 6 weeks. I've spoken with many who might think from 2 minutes to 6 hours is short-term. Right now activity. If you choose to use technical analysis in your decision-making, I would encourage you to give thought to how these decisions are made and prepare yourself. We told you yesterday to become a proficient and substantial financial analyst in the fundamental space. That's going to take years worth of time and dedication. You can become a fairly proficient technical analyst in an extremely short amount of time. The amount of expertise is much lower. You're able to get into this and start using this much, much quicker. In fact, Peter and myself teach a 4-week-long course starting tomorrow on everything you need to know to be a technical analyst. I will be teaching that class specifically tomorrow. Again, you can come to our fidelity.com/coaching. Click down here under technical analysis, and you would find here is the class all about this school of thought beginning tomorrow. Join me if that's of interest to you. You'd like to be able to make these decisions yourself. Tomorrow we'll start with the very basics, building blocks of technical analysis. However, should you be waiting, was your question, Kathy, strong, midterm, weak, long-term, etc. As you take a look at these, shall you wait for the 6 weeks to 9 month time frame when it's weak to add more, or take advantage of weak, lower price to add more to your position? When you see weak here, it's saying that Trading Central, the analysis firm that's publishing this sentiment report, says that from now to the next 6 weeks to 9 months in the future, they're viewing this as a weak possibility, meaning the price may go down. Short term, same thing. Over the next 2 to 6 weeks, price down. Whereas over the long term, looking 9 months into the future, 2 years into the future, a relatively strong viewpoint. So if you're going to rely on these, lining up your time frame, this simply tells you what a professional technical analyst thinks about this presently, saying, all right, if it's a short-term trade, be aware there's weakness showing up in that short-term history. If you're willing to wait longer term, there are some good signs if we zoom out a little further. Hopefully that makes sense, Kathy, as we work through. I know it was a bit of a long-winded answer here. Peter, I feel like I'm on a roll, but if you want to jump in, feel free anytime. We did have a question related to PE ratios. I'll hit this one and then give you a chance to talk to the good people here again. PE ratio, you ask, what PE ratio is good? And are there any ranges to consider? Remember with me, folks, that the PE ratio, the price to earnings ratio, is indeed a ratio, meaning a division problem, of the price of the shares, here it is, price, at 180, divided by the earnings per share, which if I come back over here to my overview, we can find the earnings per share listed on here, as well as a few other details. Looks like they actually moved it from here. I'll swing over to the earnings page. Our earnings per share for the company showing up on here at $7 over the course of the last 12 months. So if I take 180, divide it by 7, we get 25 as our PE ratio using this off of our most recent price. You might be wondering why that's different than the 23.4 that it's showing right here. That's because this one is priced as of yesterday's closing value, whereas I use the price including the 10% price increase for Qualcomm showing up right now. So those are going to differ as you take a look through them, but that's the idea of a price to earnings ratio, taking the share price and dividing by earnings. So let's just pretend instead of $7 per share, what if the company had twice that amount of earnings? 180 instead divided by 14. What happens? Well, now we have a PE ratio of 12. That makes sense. That went in half, right? But the correlation there breaks down. Let's say instead we had 180 and divided by 4 times the current earnings by 28. Well, now we're down to 6. Our price to earnings ratio is now a quarter of what it was previously as we moved to a larger and larger value. As we get bigger and bigger numbers that we are multiplying our earnings by, we start seeing this change over time. So there works out to be a possibility that if a company earned, let's suppose, $180 for each share in the company, well, 180 divided by 180 would come down to a maximum value at 1, right? If the company has positive earnings, it could be that they have as low as 1 on their earnings per share. If somehow they earned more than their current share price, it could get down below 1, but would still be a positive number. The concern is, what's a good number? Well, a good number is about looking at the reality of persistence and a few other considerations. Let me bring up a chart for you where I can display the price to earnings ratio so that we can think about this over time. Let's use a nice blank chart, and we'll start off right here looking at Tesla. This is the last 6 months of price history for Tesla. And if we wanted to take a look at its price to earnings ratio, I can add it on here as an indicator. Now, I know that there's some of you in the audience that haven't ever used this downloaded software that we offer. It is free, by the way, folks. Active Trader Pro. I know that there's many of you who aren't very comfortable with charts. Don't worry. We're going to make this very approachable. But I will go ahead and bring this up so everybody can see it here. There we are. All right. With Active Trader Pro loaded up here, I've got Tesla and the last 6 months of price visible to us. And down here at the bottom is the price to earnings ratio. The price earnings ratio. And we see that at some points in recent history, Tesla's price to earnings ratio was as low as 32. But not long ago, it was a bit higher, in the 70s. In other words, the company would have to earn that same amount for the next 70 years in order for you to get back your money at the current share price of $180 per share, close to the same price we were looking at on Qualcomm. But here is where it gets strange. I'll back this chart out to the last 2 years and then back to 5 years. And you'll notice that something bizarre happens here with our earnings ratio. And our price to earnings ratio for Tesla over here to the left, you'll notice up here in this little tab, was in the negatives. They were losing money and losing a lot of it. Then as their losses got smaller and smaller, we started seeing this multiple change. When their losses got very small, but were still negative, suppose they lost 1 cent per share. When you divide that into the share price in the hundreds of dollars, suddenly that looks like a negative 1,800. Or up here, a positive 1,000 because they were earning so little per share. So outright, we want to say that lower is better, but we recognize there is some lower that is really, really bad. Any negative number is really bad. It implies losses, not earnings, and lower should be better. However, there is often a reason if the PE ratio gets too low that concerns us. If a company is near bankruptcy and it happens quickly, we will see suddenly that price drop substantially, the price part of that price to earnings equation. As a result, we would expect that the PE ratio would go closer and closer to 1, a low PE ratio. But that happened not because of earnings going up, it happened because of price going down. And if that price keeps going down, it's because investors like you and I are kicking the wheels of this tire and saying it's a rusty piece of garbage with 150,000 miles on it. That's the change that occurs. So be aware that there is no right or wrong in terms of the best PE ratio. But now to answer your question without all the long-winded back explanation here, the PE ratio lower is better as long as you are comparing apples and apples. It's not fair to compare Qualcomm, which is a software, a computer chip manufacturer, against Tesla or against Apple, or far less against Ford Motor or some other company completely unrelated, as the earnings of chip producers are likely to be related to earnings of chip producers. So compare them apples to apples, lower, better, but too low. Ask yourself why it's so low presently and what's changing about it. Is there reason to think that those historical earnings that were good are going away? Is the price dropping substantially? How did we arrive at this PE ratio is just as important as the number alone. So unfortunately, there's not a clear answer on yes, this is good, this is bad, but ranges for the S&P 500 go from on the low end about 10 PE ratio to on the high end about 30 if we rule out some of the outliers like Tesla that has been very, very high up there. There are others that still are very, very high in their PE ratio, folks. All right, Peter, that's probably enough for me for a moment here. All to you, my friend.
No, I appreciate that. And actually, I'm going to take what you were saying just one step further, just to dovetail into a number of different questions that were coming through. So I'm going to try to maybe spend the next few minutes tackling maybe 5, 6 questions that were coming in right now. So using that price to earnings ratio, completely echo your thoughts and sentiment. As you were showing on that page, folks, keep in mind, this is what I was referring to in the intro, and just off the heels of what Jake was saying. A good quote unquote, PE ratio for one company in a certain industry or sector could be wildly different than the next. Keep in mind these comparisons. With that thought in mind, that is why when you come to the, for instance, dividend and earnings, we don't just show you what the earnings per share is or maybe what the PE is. We also do what? Well, we show you what it is for Qualcomm in this example versus what the industry average is. And that could be extremely important for you, and it is going to be different from one company to the next. We do the same with dividends. I did see in the chat from yesterday, there were questions about dividends, kind of payout ratios, how much is a company paying out from their cash flows in order to go ahead and actually sustain that type of dividend, which is when you're going to be seeing this previous 12 months, current trailing 12 months in considerations. So do keep that in mind. And if you would like to get a kind of a grasp on things like Jake was just mentioning, if you come to our news and research markets and sectors page under the sectors tab, by scrolling down just slightly, it will begin to go ahead and actually list for you the different sectors that are out there. If you click on any of these, it will go ahead and give some additional information. And by scrolling down just slightly, you'll actually see this tile kind of hidden in plain sight because you do have to scroll downward, but it has this sectors fundamentals section, and that will go ahead and expand on what we were seeing before was the company in comparison to the industry. This is, how do I put this? Kind of a casting a wider net, so to speak, with the sectors that are out there. Then, of course, we know down the pyramid, there are going to be industry, sub-industry, industry groups, this, that, the other. But being able to see, okay, the PE ratio for the sector as a whole, or this year's estimate, or of course, some other terms we talked about, or maybe hadn't yet. What is a company worth? Well, is it book value? Is it enterprise value? Or is it like Jake and I were saying, it's the price that willing buyers and sellers are trading it at, which is the price you're seeing in the stock chart itself. So do keep this avenue in mind as well. If you do want to maybe spend a little bit of weekend time, so to speak, just getting familiar with the, well, okay, the communications services sector, On average, it looks like has a dividend yield of about 2.3. Maybe their debt to equity is a certain range. Maybe their earnings per share is a certain range. Once again, casting with a very broad stroke here, folks, given how large sectors are, you'd want to drill down maybe a little bit deeper into a particular symbol or maybe even that industry because there could be stark differences there as well. Let me go ahead and clean up a little bit of that stock research page itself. But then what I did want to do was actually get back to another concept. When we talk about comparing earnings from company to company, from industry to industry, sector to sector, what about a company itself? What about if you're considering earnings themselves? Oftentimes we think about this little acronym here, folks that aren't familiar, TTM, that's trailing 12 months. Well, let's say that Qualcomm, for some reason, came out with a new chip or some new product that everyone had to have. Well, their earnings per share for the trailing 12 months might not encapsulate those forward projections that analysts or the company might be forecasting moving forward. And that is why if you come to something like our stock screener and you even type in PE, you have the choice to look at what that PE ratio was for the trailing 12 months. Is that what's important to you? Is it last year's actual? Is it next year's estimate and a forward price to earnings ratio? Is it what they're going to do this year? So that's even that granularity when you're thinking about price to earnings ratio. Think about, do I want to look at this in the rearview mirror with what they've been able to do? Well, probably that's their track record. That's what they have been able to actually accomplish, but also not losing sight, as some of you had put in the audience, about what their expectations are going to be moving forward. And that, I think, is why I wanted to go ahead and transition over to a different company altogether. Boston Scientific was another one of those symbols that came through, so we do appreciate that. Common questions that were coming in, Jake, that I had seen were actually surrounding the ability to look at those forward estimates, to look at maybe forecasts, and also the analyst community. Under the stock research page, analysts and ratings, you've got the ability to come here off towards the right-hand side and see these research reports. Sometimes it's hidden in plain sight, but make no mistake, all of these different links that we are observing here are actually reports from said independent firm or analyst company. Now, of course, if you were to click on ISS EVA, that's going to go ahead and pull up their structure, their thought process, how they are approaching this. And you can see how they break this down. And it's a 5-page report or so. Now, if you were to look at the next one down, Zacks Investment Research, you click on this analyst. Well, they're going to go ahead, have their own look and feel towards how they are approaching things. Do they have a bit of a technical tilt as well as a fundamental tilt? And that would be a 9-page report. Well, maybe you don't have the time to read 5 pages, maybe not 9 pages. I'm a slow reader, which is why I oftentimes will also rely on this Refinitiv Veris report. By clicking on this report, what it will do, rather than being from the thoughts of just one analyst, they'll do a better job, in my opinion, of kind of aggregating the sum of those parts out there. And what I mean by that is they're certainly going to go ahead and have lots of these fundamental ratios, which for you might be important in your decision-making process. But down below, they're also going to begin to factor in these price targets that I know was asked for quite a bit there in the queue. And these are going to be those 12-month price targets. And what they'll do is show out of the number of analysts here, maybe I can try to make this just a little bit larger. Hopefully that's coming through for everyone. Out of those 29 analysts out there, there's a low on the street, 73. There's a high on the street of 90. That's going to give us that mean of the 81.60. Target versus current. Where do we currently stand? High side range, that average is, the low side range. And they do this not only for the price target in nominal terms, but also then getting into some of those ratios like that earnings per share ratio, like those actual estimates themselves from the earnings perspective. And they'll do that, of course, out into the future with various numbers of analysts that currently have those expectations. So from at least my 2 cents, this type of report, I believe, has a lot of value to it. Once again, the Refinitiv Veris under analyst ratings, when you're researching a specific stock, click on these hyperlinks. Truth be told, I'd encourage you, if it is your first kind of foray into these analyst reports, I'd say open them all up, kind of see the thought process that all of them have. It doesn't necessarily mean that you are going to adopt each and every one, that you're going to have to read each and every one in every single company. But if you're getting started with fundamental analysis, or if it's something like myself, I was classically trained on in college and thereafter, maybe I need to get back to the well and kind of see how the analyst community approaches a thought on a company, what is going into their thought process from a not just what's currently happening, but also forecasting any types of headwinds or maybe tailwinds that the company might be facing. So this type of report goes on, somewhat short and sweet as far as 6 pages are concerned, but it really is jam packed with a tremendous amount of information, and also has those types of industry average comparisons to the company that you are looking at. And then a little bit of a breakdown, as we had talked about, and like Jake had shown, trailing PE, forward PE, trailing 60, forward 30. That might get your eyes kind of up. Okay, well, what maybe is changing? Are they going to be earning much more? Are they expecting that the price of the stock is going to be coming down? And that's when you actually start to get into some PEG ratios, which is really that growth rate forecast, also incorporating that price to earnings. So keep those analysts in mind. I know that, as Nick always says, it's institutional level stuff that's out there for you. Once again, I always feel like kind of hidden in plain sight, those hyperlinks are great ones to take a look at. Trying to close out some of these tabs here. Stock screener is another good one to go through. For instance, if you were curious on price to earnings ratios, wanted to take a look maybe just even at trailing 12 months, well, out of the kind of universe of different matches out there, it's going to tell you kind of what the quote unquote very high, medium, low, very low ranges are. Much like Jake had said, as far as the S&P 500 is concerned, oftentimes finding itself in the high single digits, then upwards. You just want to make sure that that is not kind of an accidental valuation because earnings is coming down or because the price is coming down for a certain reason. So do keep that in mind. I'm sure we'll circle back to the stock screener here quickly, but I did want to come back to a question that I didn't mean to skip over, but I know was asked early on about being able to, through the Chart Plus on fidelity.com, rather than Active Trader Pro, being able to actually compare one company or ETF or sector, whatever you want, trackable symbol, I guess I should say. And I had Qualcomm still loaded up. If you come here towards the top right-hand side of Chart Plus, you have the ability to click here where it says compare. If you click compare, it's going to allow you to input a different symbol or some type of index. I had Microsoft, as you can see here now. If I exit out of that, it's just going to leave me with the symbol that we're currently looking at. And then if you wanted to type in, well, BSX, Boston Scientific, or any other type of quote, that comparison will then go ahead through for you with the ability to view not just one additional symbol, but maybe you're looking at it from a perspective of a few of these companies, or maybe the S&P 500 as a whole. Has it been showing relative strength, relative underperformance? So wanted to go ahead and at least show the compare functionality through the chart specifically. Jake, I feel like I had one more in mind, and then I will pass it off to you. Back on the stock screener, a question came through about being able to try to view companies at 52-week highs and lows. If you come to a screener and type in even just so much as 52, let's say that we're looking at kind of the days since a 52-week high. I think the question in the Q&A was specifically, how can I see what stocks might have hit a 52-week high last week? You could incorporate, let's just say, this days since that 52-week high, and then go ahead and try to refine that to the very recent past, 1 day ago, or within the past 2 to 7 days, in order to go ahead and try to refine, okay, if a stock was hitting that 52-week high, from the confirmation filter of how many days ago did that take place? Or if you'd like to do a little bit of a combination, okay, they did hit that 52-week high within the past week. How many of them are still, kind of clinging towards that, so to speak? Are they still towards that 52-week high, or did they get up to that and now are pushing away? And now they're actually, a pretty stark percentage away from that 52-week high, beginning to get a little bit more technical in nature, but just do keep in mind the ability to utilize this screener. And if you're not able to go ahead and find something specifically with the different kind of drawers, so to speak, or compartments that they might be housed in. Try your hand at maybe the search criteria itself. Admittedly, if you're looking for price to earnings and you type in price earnings, well, maybe you're not finding anything. PE, well, maybe not finding anything. P/E. Okay, now it's coming up. So there's a little bit of a nuance to that search functionality itself. Maybe not as good as the Google algorithm that's out there, but do try to maybe type in a handful of things, or of course, you can always click on this view all, and that'll give you kind of the bird's eye view of all of those different compartments and then the different criteria that you have the ability to select within. All right, let me pause there for just a moment, Jake. I'm sure there's some additional questions that were coming through or things you wanted to cover. We've got about 15, 20 minutes left. So let's keep it going.
That stock screener is a phenomenal resource, folks. I hope you can see how once you have some criteria that you appreciate or enjoy about a given stock, this is where you can get some real answers and find securities that meet that criteria so that you can then make your final investment decisions. Again, there's a lot involved in all of these decision-making processes. And so we appreciate your patience as we work to both answer the questions, but also keep it simple enough that it's appropriate for the entire audience. So thank you very much for your phenomenal questions along the way. The next one was actually a specific question for security. Let's go ahead and dive in and take a look at this. Let's see, that should be popping up for us now. The question was for this security, POET is the symbol, Poet Technologies, not one I had looked at previously. Baida says that there's some news on it that's kind of confusing, hard to follow. Maybe we could take a look at it. As I scroll down just a little ways, here is where we've got our news page. I'm on the overview, and here's where we've got the news specific to this firm. MT Newswires produces a lot of really quick summaries of things that are happening out there that are likely to affect stock prices. And as we take a look across any piece of them, this is what's happening. In this case, it's just giving us an update that there is a private placement financing for $10 million. In other words, they are raising $10 million and they're doing it through a private placement. They're not selling the shares publicly, but they're doing it through a private placement. It changes the amount of hoops that they have to jump through in terms of playing with the regulators. So they're doing it as a privately done sale where you have to kind of be on an invite-only list kind of a thing for high net worth individuals, as opposed to preparing it to be sold publicly where all disclosures have to be made in a little different way. So that's what this breaks down to mean for us. We'll take a look at a couple others as we do. All right. So next one was, all right, we took a look at the chart for Qualcomm, but what do its financials look like? Let's actually walk through some of this analysis, see what's happening on it. Again, if you choose to use fundamental analysis, you're likely going to have a relatively long-term time frame. So we're going to focus on the relatively long term for Qualcomm. Why don't we start by just looking at a chart over the long-term history for the security? This is 5 years worth of data for Qualcomm. And we see that it started down here lower at about $77 per share. And we're trading at 180. So it certainly is possible you doubled your money or more if you invested in Qualcomm sometime in the last 5 years. But we also see that there was a period right here in 2022 where we were already at and even above this current price, somewhere in the 190s. So it's also possible within the last few years, if you bought Qualcomm, to actually be sitting here on a loss so far, even though the stock has come from 100 up to 180 over the course of the last few months. Knowing that that's the case, let's go ahead and take a look and see what the fundamentals of this company look like and how it compares to others in the industry. We certainly could start by looking at their balance sheet, but in interest of time, let's go to the sentiment tab and take a look at the summarized versions available to us for by S&P Global Market Intelligence. So first, we notice that we're ranging from 0 to 100. Remember, the higher number is better. And on our valuation and our quality metrics, it's coming through in the top 2/3, right? 78 and 76, not bad at all. And this is specifically comparing it against the rest of the technology sector. Then we come down here and look at growth stability. Well, not quite as healthy of growth. In other words, it has been growing a lot, but can it likely continue to grow those earnings, those profits, those margins over time, perhaps not as reliably, middle of the road compared to the rest of the technology sector, and financial health at 55. If we wanted more details on this viewpoint, we would click more, and there's a whole bunch of details there. But instead, I'm going to take us over to the other page we glanced at yesterday and I mentioned today, but we haven't looked at. And that's the statistics page. And then over here, the key statistics page. What I like about the key statistics is instead of looking at everything out there in the information technology companies, Qualcomm is now being rated against other semiconductor and semiconductor equipment industry stocks. Now we're looking at the average as calculated within that time frame, and here you could read up on that methodology if you needed some detail. Now we've zoomed in just a little bit. All right, Qualcomm, I see you. Your chart looks pretty good recently. As long as I didn't buy at the highs in 2022, then I'm looking at a pretty decent profit right now. Is it worth continuing my investment or starting a new one? Well, the first list on here, this is effectively the largest company in this semiconductor and semiconductor equipment whole. It's right up there at the very top. The higher on here, the higher that actual value. And as we scroll through, we see that's not necessarily the case for PE ratio, where our PE ratio is 23 versus the average at 44. But now I ask you, we just learned about price to earnings ratios. Is higher better on price to earnings ratios? The answer is no. So here, we don't have that same luxury of higher always being better. Higher is just higher. And higher on a price to earnings ratio means we are paying more for the same amount of earnings. In this case, Qualcomm is trading at half of the industry average for semiconductor earnings. In other words, it's trading at relative discount. It's on sale compared to others in that area. Not the lowest, but 41st if we lined them up from lowest to highest and ranked them 1 through 100. If we take a look at his PE ratio on the last 5 years, similar story, much lower than much of the rest has been. But here's where it starts to get a little bit negative again. Well, Qualcomm has a PEG ratio, price earnings growth ratio. That's not a metric we've even talked about yet, but I will tell you higher is better on this one, implying more growth of their price to earnings ratio. And as we take a look, how is their price growing over time? Well, we'd like to see higher, and unfortunately here we're finding it is lower than the industry average. Maybe that has to do with some of that growth stability that S&P Global was giving a lower score for Qualcomm as we looked. Do you see how we are going to have to give thought to each and every one of these lines to get a whole picture of what's happening for Qualcomm? We've got 10 minutes left, and if we went at this same rate, we might not even make it through just these up here representing the valuation area. There's also an entire section for growth, an entire one for margins, an entire one for returns, debts, operating metrics, and that's just the starting point here, folks. So please be aware, undertaking your own by hand manual fundamental analysis of a company is a large undertaking. It requires substantial preparation in terms of your education and understanding. It also requires a substantial amount of time on that specific company, that specific time you do the analysis. That differs vastly from the world of technical analysis. And you'll find that if you happen to join me in that class that starts up tomorrow at noon, then we will show you how you can do technical analysis in a quickly repeatable, easy to learn process. Neither technical analysis nor fundamental analysis guarantee profits. Unfortunately, that is not the case as we look through these. So excellent questions still coming through. Any of these ones standing out to you here, Peter, that we should jump into next?
Yeah, let me try to do a few. I don't want to say rapid fire because we want to do them their due diligence, but a question or two came through about Active Trader Pro being able to download that, and then also just to recap on how I got into that stock screener. So let me at least just clean those couple up. In order to download Active Trader Pro, if that is something that you would like to incorporate into your decision-making process, your research, your capabilities, accounts and trade towards the top left, and then Active Trader Pro is about 5 links downward. You can also type in ATP if you would like. The reason I like to go ahead and use that quick search as an example, once again, just the 3 letters ATP, like the acronym for Active Trader Pro, is it'll allow you to go ahead and get to the Learn About Active Trader Pro, which was the web page that we were just on, but it's also going to go ahead and give you the ability to get to our pre-recorded session and series. So if you are clicking on this Active Trader Pro Getting Started video, we are going to have a live class getting started here for the full month, but this is a pre-recorded version of our Active Trader Pro classroom. It's a little bit condensed, of course, because in the classrooms live, we've got the flexibility to engage with the audience like we're doing here and now through and through. But we really will talk about the fundamentals of getting it set up and placing your trades, different types of charting capabilities, as well as getting into different options tools if that's something that you are looking to do. And of course, if you're clicking on this first link by searching, that's going to take you back to that first page that gets into a little bit more about those opportunities. I think customization is the name of the game for Active Trader Pro. There's a tremendous amount that it can do that the website can't, and vice versa. There's a lot that the website does that the Active Trader Pro platform does not either. And that's by design. We want this program to be as light as it can be, but as powerful as it can be. And that's a balancing act, of course, that we are always trying to refine and get better at. But really making it your own, having the ability to have numerous charts set up side by side, being able to edit, change, toggle your orders windows, look for different types of opportunities through filters or real-time analytics, you name it, the list goes on and on. So I'd encourage anyone who is interested in that bookmarking this, or of course, just downloading it and maybe having it run in the background. Doesn't take but about 5-10 minutes. Other thing I wanted to circle back to, news and research and stocks. In order to try to get to that stock screener, news and research, and then stocks would take you to the kind of stock research homepage, so to speak. And this tile up here in the top left is the stock screener. You can go ahead and actually add some type of top level screen off the bat, or you can just launch the stock screener. Launching the stock screener would allow you to go ahead and actually pull up what I had, which had that search functionality where I was demoing the 52-week highs and lows, price to earnings ratio, the different categories off on the left. And there's also the ability to look at some of those analyst communities that we had talked about. Maybe you're looking for a kind of a popular strategy out there, deep value. Maybe you're looking for income and growth, dividend growers, you name it. Well, maybe you're looking for dividend growers, but you're not sure how to set up your own screen. You can click on some of those strategies. This one built by Zacks Investment Research. That was one of those actual analyst kind of opinions and research reports that we took a look at. And they'll actually give a little bit of kind of bones and outline to their objective, what they mean by dividend growers, kind of a fancy word terminology. So they'll tell you, okay, here's our objective. Here's what our strategy entails. Here's also what to look out for, things that we want to be wary of, not just necessarily building out a dividend screen that has the highest yielding dividend payers. They're going to say, hey, we got to make sure that we're also taking this with a fine line, making sure if it is a high yield, then it's not by accident. And that they also have the ability to go ahead and sustain that for quite some time. That's where you see some of these growth rates. Another question came through about forward estimates. Jake, I don't want to, I guess, speak out of turn here. Anytime that I'm thinking about valuations, financial models, I'm oftentimes thinking maybe about 5 years in the future is probably as far as those projections go. Correct me if I'm wrong, but usually 3 to 5 years, at least as far as forward-looking estimates from a revenues perspective, sales growth would be about as far as I would say most analysts are going to want to go. Above and beyond that, I feel like you're going to have so many, you know, what do they say? The butterfly effect, right? Maybe something that happens a year from now at an incremental 0.5% or 1% kind of expanded out over that month over month growth, year over year growth, going to make a big difference 5 years out. So I would say for most part, analyst community that at least I'm taking a look at anywhere from a 3 to 5 year forward projection.
I'd absolutely agree with that, Peter, and add to it the fact that when you see a price target published by an investment firm, usually those are 1 year out price targets. So they'll do all their analysis, they'll give you a 5 year view, but the reality is they usually only publish that price target at a 1 year lookout because it's just like the weather forecast, right? The weathermen can be pretty good and pretty accurate at telling you what the weather is right now or in 10 minutes or an hour from now. But if you want the forecast for 7 days out, he'll give it to you. But I wouldn't trust that that means I don't need to look outside and check if I need an umbrella, right? Let's go ahead and double check as we get closer and closer. Those will be updated over time as we get nearer and nearer. 5 years is the furthest out I typically see. 3 fairly common 1 year price targets.
Perfect. No, that's terrific. And what was the other questions that were coming through here? Anonymous, I'll answer the question. The classroom that I was referring to meets weekly. So once per week, if you are, let's just say, going to fidelity.com/classrooms, or you can come to the Learn, classically called the Learning Center, which is still stuck in my mind. Fidelity.com/classroom, a great way to get there. But if you're already on the Fidelity website and you come to Learn under News and Research, the last link is Learn. Should be the first, right? Why is it the last one? Neither here nor there. But events off on the left-hand side, trading strategy desk classes. This, I believe, is the one I was referring to. There's different categories for these classes. Active Trader Pro, I think, was in the theme of what I was referring to. I had shown the pre-recorded condensed version, but if you want to join us there on the fly, you can come to Active Trader Pro. And what that will do is then break down that classroom and tell you what it's looking like for May. May 1st, we just met last week. That'd be a great time to go ahead and maybe watch that pre-recorded version. It's only about half an hour. You'll be up to snuff here for those following weeks, May 8th, 15th, and 22nd at the same time there, 10:30 to 11:30 Eastern Standard Time. Love to have you join in that, as well as any of these other themes that you might find helpful. What was the other one I wanted to go back to here? Question about how to get back to, and I think we were showing that maybe that sector information. Got too many tabs open. Let's clean this up a little bit. Sector research. So news and research, markets and sectors. That'll land you on the markets tab, and then hidden in plain sight, once again, top left, sectors will take you to this page with kind of how the sectors have been shaping up over various time periods, classically thoughts as to how sectors perform in the business cycle. And then by scrolling downward, I had given the example of communication services, but maybe we were to take a look at consumer staples. By clicking on any of those, it will expand kind of what we're seeing here. And then by scrolling downward, you'll get the sector fundamentals information that'll then get into the price to earnings ratios, earnings per share ratios, this, that, the other. So do keep that in mind as well. Once again, news and research, markets and sectors. And then, of course, sectors is what you'd be looking for down below. Got all these sectors with various types of information like the weighting, and then by CFRA, and I believe Argus out there with some information on overweight, market weight, underweight, this, that, the other. I'm taking a breath, seeing behind the curtain here, folks. I'm just trying to clean out as many of these
All right,
as we can.
Peter, I've
Jake.
got a couple things to hit
Go
while
for
we
it.
wrap up. We are officially at time, folks. I can't believe it, but an hour flew by. Folks, you'd spent an hour with me yesterday, an hour here. You're beyond patient, and we appreciate the chance to share some of this education right alongside you. Today, we have the opportunity to share with you a few of those insights and answer your questions, which is always a fun version of this time. Helps us know what's really hitting home for you and what's not. A couple of final themes that I'm seeing in the questions. If you head to fidelity.com/coaching, maybe I'll pull that up one more time here for the good folks. Fidelity.com/coaching, folks. This is the webpage, fidelity.com/coaching. Here's where I would point you next. If you aren't sick of seeing myself, Peter, Nick, and the team, well, this is the next spots for you. If you are one who would like to see how this happens in practice, how do you learn from the information out there, make some trading-based decisions? The next spot I would point you is right here, daily market briefings. These ones show up at the start and end of every single trading day, where we look at live stock charts, talk about the current news, what's happening in their most recent earnings, and then evaluate the pros and cons of buying and selling at any given point. We also have the opportunity to respond to some of your questions there and even look at the symbols that you're interested in sending in to us. That's a phenomenal spot for those of you who want to see it put in practice. For those of you who think, you know what, maybe I would be interested in learning a little bit about that technical analysis version, that's going to be, again, right down here at technical analysis. I'll be teaching that 4-week class. It's 1 hour per week, every Friday for this month, starting at noon. So I'll be here. That's the technical analysis section. There are many other classes, but if you want a nice default criteria on how to build through there, excellent. Join us there. And finally, if you're thinking, you know what, I don't want to deal with the charts so much, but I do want to get my feet wet understanding my own management of this money, I've learned a lot and want to continue, join us at Trading Basics. It will be your spot. Find a session. All of these are great, and we loved seeing you here. But thank you more than anything for the time to be here. Finally, we saw several people asking about recordings for our sessions. Hopefully that means that you enjoyed it, want to learn more from a repeat watch of them. Well, folks, let me tell you a few things. The one yesterday was recorded. It's going through a compliance review process now, which takes a week or two, and then it would be posted to the website. When that occurs, you will receive an email if you are registered for that session, notifying you that it's now available. You can go ahead, hop in and watch it, pause, take notes, rewatch to your heart's content. Today's session also says it is recorded. You got a warning about it right when you signed in. These ones are recorded, but only for compliance purposes, to make sure Peter and myself didn't go too far off the rails, as it were, and unfortunately are not published hereafter. So everything today will not be published. The one from yesterday is. So hopefully that's enough to get your fill. If not, join us back for one of these live sessions. Fidelity.com/coaching is the website, and we'll love to see you back here very soon. Until then, we wish you the very best. I hope it's been a good introduction in this getting started with fundamental analysis. Peter, thank you for being here, my friend. Take care, everybody.